Hello everyone, Jesse Webb, TradersPro. Apologize for not getting a video out yesterday. I was out of town traveling, couldn't quite get the laptop recording to fly. So we're back in business today. Market conditions. Let's jump over here to direction alerts. It actually did dip down to bearish in a bear market yesterday, and is ticked back up today. So again, we're right at that location where we really need to see some support in the market. Otherwise, things could escalate to the downside. We're just sitting right here on that momentum indicator. Like I say, it had just barely ticked over to this side yesterday and now has moved back up. So we'll see if we find any support right here. This is that support trend line that really needs to hold. There's, it's a little bit high. It's not a perfect support area, but inside of this range, markets really need to hold up right here. Otherwise, there's a very good chance that we could continue to slide and potentially retest this low, or potentially retest October lows entirely. So we'll watch for that. We're definitely in a weakened condition right now overall. Buy-sell ratio, you can see that as well. This is not an ideal setup for anything long, anything bullish. But it did tick back down just a little bit, so we'll see if we reverse back down. It's happened before where you get this rally up and then a move right back down, but it's not super common. Typically it looks more like this. It'll bounce around, or you'll have multiple moves once we've entered into one of those new trends, whether it's a bullish trend here or whether it's a bearish trend here. You typically maintain that trend for a length of time. Okay, so we could be relatively early in this corrective counter trend or continuation of the downtrend. Obviously, you just don't know. The overall long-term trend, though, is still in a bear market, this overall downtrend, and that becomes the overarching bear market if you're stuck in one of these ranges where we're maybe a little closer to the downside or the upside in the short term. Well, what is the long term? Well, the long term is still, we know that we're chopping around this bottom. We're still in this downtrend, this overall bullish or bear market trend. The depth of it, the lowest point was about -20. We're now back up to about -5. And that's typically where some of these bear markets top out. We've seen some pretty aggressive ones with the COVID move, and even this move, they sold off pretty deep, way down into kind of off the charts right here. So keep an eye on that as far as if we really see maybe a gap higher today and then continued selling to the downside. I'd just be watching those support levels pretty closely. On the muscle stocks list, we're seeing oil come back in. Here's oil refining, PBF. This has been one that has been pretty volatile over the last year. Lots of ups and downs. Oil has been pretty volatile, and this has certainly been hasn't been excluded from that. Let's take a look at some of these others here and see what we've got. I'm going to come back here to the 6-month chart. URI, construction stock, construction sector, building and construction, has got a nice trend profile. Nice steady uptrend. I like to look at those that are kind of in that 45-degree angle, just kind of chugging along this direction. Then they pause for a length of time, and then they start to work on that overall uptrend again. That's really how the system is designed in terms of looking for this setup right here is stocks that are ideally moving higher. They've got a long-term uptrend, short-term uptrend, and a new buy signal. This allows that new buy signal location entry to happen around here, and a stop loss either at the low of the buy signal bar or the low of the most recent trend. If it's below this whole signal, or again, whatever that most recent counter trend pattern is, if it would have been here, then that stop loss would have been below that green bar. If it's currently right here, the stop loss could be placed down at this low. What that means is that if the stock reverses all the way back down below this location, then you're out of the trade. Something's probably broken in the overall trend, because you can see pretty consistently when it does move, when at least with this overall uptrend, every time it started to move up, it's just continuing to stair step higher. So we'll see if that continues overall on a stock like that. The next one, BP. BP, again, another oil stock, an ADR, a breakout with a small retest. Here's your breakout. Not quite a retest, but at least a little retrace. And so we're seeing oil. We're seeing oil and the utility stocks and construction actually are still kind of rounding out that top, in transportation. We've seen some big pops in transportation with these tankers lately. STNG still moving higher, and what was that other one on the list there? TNK, that's right. Some of these have had some pretty nice moves. They're starting to get a little bit extended, but those top sectors list, that's the place to be looking. Oil and energy, construction, utilities. For the reversal play, if you're looking for stocks that may be out of favor and starting to bounce, then you're looking down here at this bottom range. Tech is trying really hard to kind of round that corner. You can take a look at some of those stocks in there as well, and look to see what's happening inside that group. Let's take a look at that first one, SGML, because we actually talked about this one last week at this gap location. So it gapped higher. It has now been consolidating, but you can see all the buying that's been happening right here and here and here, all those bottoming tail bars where you're getting buying at that support level. It's finally starting to break out here after this real nice, large couple of counter trend looking patterns. If I pull that into a 1-year chart like this, I mentioned before that ideally we want to stay out of this mess. We want to participate in these long green and yellow trends and avoid the yellow and red trends, and once they start to break out and start to reverse that direction, then this becomes the location to start to work to look at. It bumps up to that extreme, maybe watch for it to just settle in and pull back a little bit, which would have been the location back here. Now it's already moving again. It can certainly be a continuation type trade. If you don't have full access to the site and software, you can sign up with the link below, and we look forward to having you. Have a great day today.